All right, let's get into it. Today, we're breaking down Jim Cramer's playbook for 2026. And look, if you've been riding that massive AI wave, you are definitely going to want to pay attention because he's signaling a huge shift in strategy as we start to move past all that initial hype. Okay, so let's just dive right in with this pretty stark warning from Cramer himself. This one sentence really says it all, doesn't it? It sets the stage for everything we're about to talk about. He's essentially telling us the party's winding down. The days of making easy money just by betting on the idea of AI. Well, those days are numbered. So first up, let's unpack exactly why Cramer is waving this yellow flag. Now, he's not telling everyone to run for the hills and sell everything. It's more about injecting a serious dose of caution and a much-needed reality check into your portfolio. I mean, we all remember the incredible run of the Magnificent Seven, right? Those stocks just seem to be on a rocket ship to the moon. But Cramer's warning is that by the middle of 2025, that big, broad-based rally starts to fizzle out. It's a really clear signal that the market is getting a lot more picky about which companies it truly believes in. So the whole thing boils down to this one crucial concept: reversion. He believes that a lot of these high-flying tech stocks, especially the ones tied to more speculative ideas, are just plain overvalued. They're priced for a perfect future that may never come, and he expects them to pull back, to revert to levels that actually make sense based on their real performance. Okay, so what do you actually do? Let's move on to the first actionable piece of advice in Cramer's playbook, because before you can pivot to the new opportunity, you've got to take a hard look at what you already own and, well, make some tough cuts. And he gets super specific here, pointing his finger at these three areas as potential hype bubbles. Now, to be clear, he is not saying these technologies aren't the future. What he is saying is that right now, their stock prices are running on the fuel of pure excitement, not the engine of actual, real-world profits. This quote about the data center build-out, it just nails his point. He calls it willy-nilly, which paints a perfect picture of a frantic, unsustainable gold rush. It's that classic boom phase, And we all know what usually comes after a boom: a correction back to reality. So if you're trimming back the hype, where does the smart money go next? This is the absolute heart of Cramer's whole thesis for 2026, and it's a really fascinating shift in perspective. This slide really captures the entire pivot perfectly. He's saying, hey, stop focusing so much on the companies making the shovels for the AI gold rush. Instead, start looking for the master craftsmen, the established blue-chip companies who are actually using those shovels to find gold and boost their bottom line. And he gives some fantastic, tangible examples of this in action. We're talking about legacy giants in healthcare like Johnson & Johnson using AI to innovate in drug discovery, or huge consumer brands like Procter & Gamble using NVIDIA's tech to find real cost savings in their supply chain. This is AI in action, not just in theory. And Cramer thinks the market hasn't fully appreciated this. Okay, this brings us to the fourth point, which is really a much bigger philosophy. This isn't just about what stocks to buy, it's about how you should approach the very act of investing itself. To really get what Cramer is saying here, we have to start with this timeless piece of wisdom from Warren Buffett. The idea isn't to chase quick profits, it's to find and own great businesses for the long, long haul. This is the bedrock of the entire strategy. But here's where Cramer adds his own little twist. He is 100% on board with Buffett's method, buy and hold, but he kind of disagrees on the assets. While Buffett famously advises most people to just stick with simple, low-cost index funds, Cramer thinks everyday investors are capable of a bit more. And he lays out a really practical way to structure your portfolio. You start with a solid core of index funds for safety and broad market exposure. Then, you add a handful of individual stocks that you've actually researched and believe in. And finally, you have some kind of non-stock asset on the side for a little protection. It's a really balanced approach. Finally, let's get to the most exciting part of this whole strategy. It's the idea that within those few stocks you pick for yourself, just one could have the potential to change everything. This entire philosophy is powered by one of the most incredible forces in all of finance: compounding. You've heard of it, right? It's that magical snowball effect where your money starts making money, and then that money starts making even more money. It truly is the engine of long-term wealth creation. Cramer brings this whole concept to life with this really powerful story from his childhood about a man he calls Mr. Hank. This wasn't some Wall Street wizard. He was just a regular guy who built incredible wealth by doing something simple: buying good companies, writing them down in a ledger, and just holding on. It's the ultimate proof that patience and compounding really work. And this quote right here, it just perfectly captures the ultimate goal. Among those few stocks you research and really believe in, he wants you to have one that you see as a true moonshot. Why? Because if you're right, that single investment held patiently over many years can have a truly life-altering impact on your financial future. So there you have it. That's Cramer's playbook for this next phase of the market. It's all about shifting from hype to real value, owning great businesses for the long term, and always being on the lookout for that one incredible opportunity. Which, of course, brings us to the final and maybe most important question of all, the one for you to think about as you plan for the years ahead.